market's going up, and that's good. But there's one particular market going up that's not good. Let's take a look at the commodities market today on the Weekend Update. Okay, let's talk the markets and let's talk commodities. First up, let's take a look at the market. This is the way we've been looking at the market every time on the Weekend Review. You'll notice it looks a little different. Yahoo decided to change their charts, and I was not happy with that. They turned my S&P 500 blue, which totally defeats the purpose of this exercise. So as you'll see, now we're getting our charts from TradingView. Red is the S&P 500, purple is the 200-day moving average, and what do you notice? Well, we continue to forge new territory in all-time highs, but it does look like we're having a little bit of indigestion up at these levels, right? We've hit a couple air pockets in the last couple of days, so we'll see. As you know, I think we are well overdue for a little bit of a digestive move. I'm waiting for it at any time. I'll never root against the market or bet against the market. It goes up over time, but if we were to get a little bit of digestion here, I wouldn't be surprised. And one of the sources of this digestion, some of it was related to CPI, which was hotter this week than expected. That was our last video that we did on the channel. But I also wanted to come into talk about another aspect that I think the market's going to have a little bit of indigestion with, and that's commodities. So if you'll remember in the last video, we looked at the components of inflation, and I said all the disinflation has primarily been through manufactured goods and commodities. And what we're starting to see is the beginnings of a bull market in the pricing of commodities. Here's what I mean. This is crude oil. And if you look here, this is almost a year-over-year look. We had some highs into the winter, then we had some sell-off, but mostly, there was a bottom in oil around $70 a barrel. And what we're seeing now is we're starting to see some upward pressure on the price of a barrel of oil. In fact, if we look at where we are today, we're pretty much flat, but this looks pretty strong. This looks like a trend like it wants to go higher. And certainly some of those geopolitical events with what's happening in the Red Sea and the attacking of oil refineries in Russia is definitely going to put some pressure on this to move higher. And that's pretty big because the only reason why we're hitting our CPI numbers, because services is very hot right now, is because of what's happening with commodities. So if commodities no longer provide disinflation but start to go back up again, then we're in some real trouble. We're in the real soup at that point. I'll look at another one. This is more of an industrial commodity. Copper, used in wiring, used in EVs, used in power applications. If you look at what's happening with copper, you can clearly see the downtrend. This was all last year. Then you can clearly see the bottoming. It basically spent, just about a year bottoming. And then now we have a breakout to the upside, and it looks pretty strong. And so one of the reasons why I think the market's having some indigestion here, our expectations were rates were going to come down. That expectation looks like it was a little too positive, a little too aspirational. We're going to get a lot less rate cuts than we were anticipating. One of the other expectations that this market is built on was that inflation was going to be tepid, remain under control. And what we're starting to see in this nascent bull rally in the commodity markets, I think this is going to start pressuring CPI as we start to get to the back half of this year. So I'm not surprised the market is having some indigestion here with that. And this was one of the risks as we got into this year. I said, the market has a lot of really high expectations for how this year is going to go. And increasingly, it looks like several of those expectations aren't going to come to fruition. So there you go. We're on watch, a little nervous about things, but overall, the market still looks strong. So I'm not worried about that. We'll catch you next week.